Good morning, everybody. Today, I'm going to comment a few technical indicators. So the most important one will be some comments about the daily perfected setup 9 sell signals we saw this week on European and US indices. Then I'm going to update my technical view on US and German government bonds following the recent correction. And we are going to study the impact of this bond market correction on sector allocation with a significant sector rotation starting over the last week or two towards value stocks, we'll see that, and out of defensive stocks. So if we start with Euro Stoxx 50, I commented in my recent publication the mark indicator sell signal. I mean, it's a contrarian sell. It's not a strong sell signal, but it's a very contrarian sell signal indicator. So after a strong rise, you see that this is the 9 you see on the chart. First, have a look at the performance of this indicator over the last few months. A very good performance. This is because the market has been trading sideways, so no clear trend over the last few months. And usually, this indicator is very good when the market is trendless. When the market has a strong trend, usually you just have a minor reaction following a 9, and then after that, renewed strength when the trend is trending upwards. When the index is trading upwards, or a decline when the market is weak. So right now we can see a critical juncture. So you can see the 9 sell here, which correctly catch the high, the 9 buy here, which was right at the low of the market, the 9 buy here, which was a bit before the low, so a less, I would say, a mixed signal here. But nevertheless, if you held the position, the signal after a couple of weeks was pretty good. And right now, another contrarian sell signal this week, so on Tuesday. As you can see, the market has not yet reacted to the signal. The rule in general being start of a pullback at least within the next 3 to 4 sessions. So we can see that yesterday was session number 2. We still have another session or two to validate a short-term topish view. And that's what I expect in the short term. Why? Not only because of this indicator, but also because of the lines you see here, which are linked to the setup indicator. These are called TDST lines. So a TDST line is defined by the start of the setup 9 in the opposite direction. So you can see this decline, 1 to 9 here, and the TDST resistance line, you can see it's a red line, is the start of this buy countdown, so decline. On the opposite, you can see this line here. This is a positive, a bullish support TDST line, which corresponds to the start, to the one here, which is the start of this uptrend. So usually, when you have a downtrend, which is the case right now, you can see the downtrend is defined by this TDST resistance line. When you have a downtrend and a technical bounce close to this line with a setup 9 sell, which is what we see here, usually it's a good timing to take some profits and be more, or at least be more cautious for around 1 week on the market. So that's what that's my view here. As you can also see, we are getting close to an important chartist resistance zone, which is at 35.50, which corresponds to the high of late June, early July. So overall, based on the market indicators, based on a simple chartist analysis, I think it's time to be a bit more cautious. I didn't show you overbought indicators such as the RSI, but I get the same signals. So the market is becoming a bit overstretched in the short term. I'm not telling you we are going to have a major trend reversal, but in the short term, what I would like to see is a start of at least a pullback, I would say, from here from the 35-50 area, and at least a pullback, ideally in this zone. On DAX 30, so a similar picture. You can see the 9 here. You can see the TDST resistance line, which was hit yesterday. I would add that I mentioned the reverse head and shoulder pattern. So it was 2 weeks ago. And what I told you 2 weeks ago is that the upside potential of this pattern was here, so at 12,400. So it's quite interesting to see that the 9 close to this TDST resistance line is also occurring just when we are hitting the upside target, the trading target, the short-term target on DAX 30. So another reason to be more cautious around 12,400. If we now look at the S&P 500, so you can see that it was on Wednesday, so the next day, the S&P 500 completed also a daily setup line sell. What my view, my interpretation of this trading sell signal is not so strong than on European indices. The reason is that, as you can see, we don't have a TDST resistance line. So it means that for me, it's a weaker contrarian sell signal. Why don't we have this TDST resistance line? It's because we never had a setup line buy here, so you cannot see any numbers on the downside, which means that the correction was too short, both in terms of timing and also amplitude of the correction, to lock in a 9. So it shows that this was probably just a pullback in a bull market, according to the indicator, and the fact that we didn't have a TDST resistance line shows that it's quite dangerous, quite contrarian to take this sell signal. Nevertheless, I think that as the index is now close to its previous high, so this is a record high hit in late July, I think we are also likely to see a bit of profit taking in the short term close to this resistance zone. So we could also start to see a technical pullback after this 9 on the S&P 500. Now if we switch to bond markets, we can easily see that a correction is on the way. So after a very steep decline of bond yields in August, so bond markets are starting to make a pullback. This is yield, so this is the reverse. Here I plotted a regression line since approximately since the end of last year, so over the last 12 months. You can see this steep decline, so this is the trend, downtrend on strong downtrend on the regression line, and this is the regression line minus 2 standard deviation and plus 2 standard deviation. So we can see that there were 2 periods of excesses in this downtrend. The first one was at the beginning of the year, followed by a pullback, so a consolidation move here. And the second one is right now. So we already saw a mean reversal back to the regression line, also back to the declining 50-day moving average. So this is the blue line you see here. And as you can see, over the last 6 months, this moving average provided resistance numerous times. So we are reaching it right now, which means that if you successfully shorted T-note futures close to the low, so around 150, then it's already time to book a bit of profits, as we may get a pullback from this resistance zone. So the resistance zone, as you can see here, is between 180 and 190. So possible start of a pullback, of a setback from here. However, I think that the consolidation process will probably have further to go, at least in terms of time. This correction should last at least a couple of months, which means that after this pullback, we are still likely to go a bit higher, possibly between 2% and 2.10. Similar outlook on German bond yields. You can see as well this 50-day moving average, which correctly catch most tops, so most the end of most technical bounces here. What we can see right now is that bond yields are once again back on their declining 50-day moving average. This time, however, I think it's more likely to break above this moving average. Why? Because we first had a double bottom formation, so usually a double bottom is a quite powerful pattern. And we can see the reaction to the ECB yesterday, so a quite bearish reaction for Bund futures. So the market started to bounce back. So we saw yields moving back below minus 0.60, but the correction was short-lived, and we ended the session at minus 0.50, which means that I think something is going wrong right now on German bonds, and this justifies probably a continuation of the technical bounce on German bond yields, possibly back to minus 0.40%. In the medium term, I do not rule out a stronger bounce, possibly to minus 0.20%. What seems likely is at least to spend more time trading above August lows around minus 0.70%. So impact of this bond market correction, we can easily see that on sectors, especially on value stocks. So we can see here the German 10-year bond yield. So this is the green line. And you can see the relative performance of the MSCI Europe Value Index versus the MSCI Europe. So as you can see, a pretty strong correlation, I would say. And we see that the reversal of German bond yields registered in early September is starting to have a positive impact on value stocks. So a pretty steep technical bounce this week on value stocks, which made a technical bounce from multi-year lows. So as you know, value stocks have had a very bad performance this year. Like in previous years, and the fact that we are starting to see a bottoming process on European bond markets is good news, quite encouraging news for value stocks. If we have a look at the sector rankings, so you have them in my weekly report every week. We can see the ranking of the momentum, the relative momentum of sectors. So you have the best part, the best ranked sectors here in this part, which are also the most overbought. And here you have the weakest sectors, so the one with the weakest momentum, which are also the most oversold. So what could happen with the start of this bond market correction is the start of a mean reversal process on sectors with investors. That's at least what we started to see over the last week or two, with investors booking profits, especially on defensive sectors, and slowly reloading lagging sectors, especially autos, possibly oil and gas, because this is a value sector, and maybe even banks. Have a great day and a nice weekend.